Welcome to everything you always wanted to know about flood insurance, but were afraid to ask. I'm Jason Harris. I'm the CEO of CartoFront, and I'm joined by Edna Hernandez, who's our customer success manager. And this is the second of two English presentations that we're making. We had one last Thursday as well. Next Thursday is in Spanish, and Edna will take the lead, and I'll follow on. And already with the great response in Royal Palm Coast Realtor Association, we'll be setting some stuff up for April as well. Probably April 1st, which is the date that FEMA is changing over. It's a Friday. We'll probably have something in around that date for your market, but maybe also for all of our markets around the country. You are our customer. We have worked long and hard to build out an easy technology that's frictionless to allow you to get the information you need to know to assess risk and cost of flood insurance. It's especially crucial in your part of the world and is taking on more and more criticality because of FEMA's changing to pricing, which we'll get into extensively today. But we like to view kind of a holistic approach to our support of you in three facets, right? So in the sales process and assessment, right, you're able very early to assess the risk for properties that you might be looking at with your clients. As you get down to submitting an offer, it's the total cost of home ownership. We believe that there's a huge opportunity for you to take those early quotes and get them to something that's bindable and understand exact costs for the property that you're going to be submitting a bid in. And that's through our strategic partner that we insure, or someone qualified that you work with. Show them the quote that you took from CartoFront. And then once the contract is signed and you actually need your client to get insurance, whether they're on a flood property or they just want peace of mind, making sure it's a smooth transaction from contract to close. Today, and just overall, we view not just the technology, but the education to be integrated together because, it's all one seamless opportunity as we see it. And, really it's about helping make sure that you're the most knowledgeable, confident, profitable realtor in your market. Knowledge is power and power is profitability. And especially now with FEMA making all their, modernization and their new changes, we want to make sure you know everything about that and have access to the resources that you need. We'll be using the chat function throughout the presentation today, and that queues up Q&A at the end. And so what we want to do is kind of share the questions that we're interested in hearing from you about as we go through this, because this is a learning opportunity for us. The first is, have you tried our CartoFront application? So if you can type yes or no in the chat box, that would be great. Edna will be capturing all of that, as well as any questions that you submit at any point as we go through here. And here are three kind of leading questions that we're interested in hearing from you about. One is, what information do you need to advise your clients? So help us help you. Two is, when you share a quote with your clients, whether from us or from somebody else, what questions or objections do you hear most often? So what's on your clients' minds would be really helpful to understand. And then third is, how can we service you further? What can we do to be better at being better, to deliver something of great value to you and empowerment. Our little book, which is also an ebook, and Edna will be sharing that information digitally. And also everything that we're going to share today will follow up with an email. So you don't have to worry about notes. I mean, take your own notes, but you don't have to worry about getting URLs and stuff like that. We'll bundle that and send it along. But we have 4 different chapters, really 3 chapters in Q&A. So flood today and do a demonstration of our product. Flood insurance 101, just so you understand kind of the basics. And then we'll talk at the end about some flood resources that are available to you beyond the training today. So let's get into chapter 1. So increasingly with every day, it's becoming a bigger and bigger national concern about how much insurance gap there is regarding flood and catastrophe just broadly. It's not just flooding, but obviously in parts of the West, it's other perils like, wildfire, earthquake, things like that. But as it relates to flood specifically, 41 million properties, residential properties, are at risk of flooding. across the United States. And this map here that's in front of us is independent research that was done to show the difference between FEMA's maps, which is kind of the standard in the industry, and then projecting out where the future flood risk is going to be. So anything with dark green gets into more and more risk that is hidden to the naked eye. And when we look specifically at the Royal Palm Coast Realtor Association area, Lee and Collier County specifically, there's a lot of risk that's been hidden based on the maps that FEMA are doing being out of date, quite honestly. So FEMA sees about 150,000 properties at risk. This independent research has another almost 46% that they see. And in total, when you look at the entire area, we think there's about 350,000 properties that are at risk of substantial risk in the area. And more specifically, two communities, Cape Coral and Lehigh Acres, have been noted in this research as being two of the greatest increases in flood risk in America. My hometown and Edna's hometown was number one, by the way, Chicago, which is not surprising given the amount of water both on the lake in Chicago and the riverways that are here in the Midwest. So let's talk a little bit about risk rating 2.0 and maybe type in really quickly if you know a little bit about risk rating 2.0, just say yes or no, how comfortable you are about that. So risk rating 2.0 is the government and FEMA and the National Flood Insurance Program, which is part of FEMA. They're updating their technology and their methodology as to how they price risk and price flood insurance from the government. It's the biggest change they've made in the history of the program, and it is changing everything that's happening around the National Flood Program in a pretty substantial way. Here's what it means for the state of Florida. So FEMA went out, built out this technology, and implemented it October 1st for all new policies. And with that work that they did last year, they put together a state by state, kind of what's in it for the state and what's going to happen. So in Florida, there's a little bit over 1.7 million FEMA policies in place. Far and away the largest area of the country, right? So there's about 5.1 million FEMA policies, and about 40% of them, a little under, are in Florida alone. Okay. Yeah, 1 second. Let me let someone in. Call. Great. And you can see by how dark it's shaded, a substantial amount of them are on the East Coast, but then I'd say kind of your area is coming in a close second. For all of the policies, they are projecting 20% of them are going to see a reduction, okay, with the new risk model, but 80% are going to see an increase. Now, a lot of those increases are going to be, less than $10 a month, which will be good and affordable, but there will be substantial increases in about 12% of all FEMA policies in Florida. And we'll show that in a moment when we get to taking some quotes. Now, here are some of the specifics behind the program, okay? So first off, the biggest change in all of this is the government's going away from pricing based on flood zones to pricing by individual property. So they're modernizing the way they approach it. And what they're doing is they're taking data from all sorts of different sources, things like elevation, distance to water, replacement costs, and they're putting it into their model. And from that, they're able to price out what the flood rate is going to be. Nationally, as I just mentioned, over three quarters of all rates are going to see a price increase. And again, as I mentioned, 80% in Florida are going to see rates go up. Now, they've capped the maximum rate for anybody's flood insurance at $12,125. So the highest risk property for something that has tremendous value on the water, say it's a $5 million property, the highest maximum rate they will ever pay through FEMA is $12,125 for a policy, their standard policy of $250,000 for the value of the property. Now, that said, and we'll get into this particular in the moment, is that that's not enough coverage for that property, but at least from a FEMA perspective, that's how they would approach it as the base policy for that. Now, what's not changing, a couple things. One is if you're on a flood zone, what they call a special flood hazard, AE, AHVE, you're still required to have flood insurance to get a mortgage, right? That is not changing at all. That's still a requirement from Fannie and Freddie and the mortgage side. Also, what's also not changing is if a seller has an existing FEMA insurance policy, it can be assumed or transferred to the buyer at purchase. And this is really important to note because it can save a lot of money for all involved. Now, while the program started October 1st officially, they're now approaching April 1st for the renewals. 1 second, I think I've got somebody else that is trying to come in. Hang on. Yep. Hang on 1 sec. Thank you. So April 1st is a big day. Oh, let me go back a step. Sorry about that. April 1st is a big date because all renewals in across the country are now subject to the new risk rating 2.0 pricing model. And so everybody's going to be repriced with this new model exactly the way I just mentioned. So by individual property based on elevation, distance to water, replacement costs, and other factors. Now, the government is capping the increase on these properties at 18% per year, okay? That said, if, let's give an example, if the current price for flood insurance for a property is $500 and it's renewed at $1,000, you will only see a cap of 18% for the first year. So it'd be $590 for the first year on the renewal. That said, they'll still, increase it at 18% per year till they get to $1,000, which is the new market rate, right? So that may take multiple years. It might take greater than 10 years, but that's the way the government's doing it. So at least they're lessening the blow for those people that have existing FEMA policies, which is great. Any community that's part of the FEMA rating system, which is kind of a community program that they offer for those communities that sign up for it, they're still going to get the discounts of 5 to 45%. That's all going to be baked into the individual property's rate. And this is the biggest one. I've heard a lot of emails so far from your area, elevation certificates. So the government, again, is baking in elevation into their risk model and their ratings and their pricing. So elevation certificates, as we know it, which used to be the bedrock of these flood insurance policies in the past, they're being kind of de-emphasized as we go, but they can also be used to bring down the cost of flood insurance if need be. So they're important if you want to go and try to get a better rate or make a case for a better rate. And so it's important, but they're being de-emphasized overall because of the way the rating system is working. In your area, there's a couple of important flood zones that we want to talk about. So, and I'm going to dimensionalize it in a moment with kind of what we're seeing in the quotes overall across the country. So X zone historically has been low to medium risk, right? And with an X zone, and I'm going to air quote that, you are not required to have flood insurance, yet we would strongly urge, especially in your area, especially with the new risking model, that research is highly recommended, okay? So the old days of it's an X zone, I don't need insurance. And I'll talk about this in a moment. We're seeing a lot of quotes where there's risk presented either by both parties, the government and the private insurer, or one of them. And those are the ones that we're mostly concerned about, right? Where people say, we don't need it because it's not in a flood zone, but actually someone's seeing risk from the pricing that they're providing. So we'll talk about that in a moment. The mandatory flood zones, though, are AE, AH, and VE in your market. And then, as I mentioned a moment ago, flood insurance is required for the mortgage. So since implementation on October 1st, we've probably taken, actually now probably closer to 7,500 quotes, on our platform. And we're seeing three emerging types of flood quotes. So the first is the flood zone itself. So it's a known flood zone, and this is why we're in business. You need to get flood insurance. So it's really a matter of what's the best option between the government and a private insurer. And we offer that on our platform. You see a comparison shop. In this example, the private insurance is slightly higher than the public option from FEMA. But again, one way or another, you just have to get the best pricing and the best insurance for your client. Second is what we're calling peace of mind. And back to the X zone, this would be an X zone, this example here, where both the government and the private insurer are saying, yeah, they're confirming there's low to medium risk. Okay, the pricing might be a little bit higher than it was maybe a year ago. It's $700 to $900. We're seeing some in the market where it's, $400 to $500, but these would be peace of mind and are always advisable for your clients, given the fact that you're in a very high risk area for hurricanes and extreme flooding incidents. The third one is what we're calling the double take, and I kind of hinted at it a moment ago, and I want to really kind of get into it right here a little bit deeper. These would be X zones, right? The historic X zones, which again, up until October, it was a standard policy. You're on an X zone, air quotes, low to medium risk, and it'll be low cost, and you could take it or leave it. Why this is called a double take is you can see the price differential between the private, which is $504, and the government, which is $1,000 more. What concerns me is that the government in this regard sees risk, but the private doesn't. And sometimes I've seen quotes the other way around where the private's seeing risk and the government doesn't. Either way, it's concerning because one party sees risk and the other doesn't. And this is what's keeping me up at night. And I'm seeing it day in and day out in your market, especially right now, where the prices are, very disparate. And, again, the historic view of it is X zone don't need insurance. But if someone's seeing risk, we're recommending to do a double take and double down on doing the homework, because the last thing we want to do for our clients is to minimize what the risk could be, and then they're hit with a storm, and then their dream home has irreplaceable repairs and not the money to be able to fix it and get it back up on its feet. So we're seeing a lot of this. I'd say of all the quotes we've seen in the market right now, it's probably 15 to 20, maybe 22%, 25% are fitting in this double take category. So really advisable to dig deeper on that. With that, let's move to doing a demo. And if there's questions on the first part, if you want to put that into the chat box, great. Edna will be happy to capture that for our Q&A. But let me get in here. Obviously, this is how I'm entering into viewing, as you do too. We have a login here. Because we're deep linked, we're on any of the market watches, so you can enter from any way. I'll go into new listings. Grateful to the association for putting our little raindrop right here. Okay. We're also inside each of the listings as well. So let's go here. I'll show you where that is. And for this property, I'm just going to request a quote. Okay. So at this time, we're taking the data. Okay. And we're cleaning the data, appending the data with outside data sources, and then sending it off to the government and sending it off to National General, who's our private insurance. Well, that's interesting. So NatGen did not return. So we're going to do another one. But you can see this is an AE zone on this property, and it's getting almost $1,800 a year. Let me see why. I'm going to copy that. And hang on one sec. Doing QA here as we're talking. Double the fun. Right back to this. All right, let me do another one here. Let me go into this next property. Hang on a second. Let's go into, let's try this one here. I think this is different. Okay, so this one went through all the way. Okay, so this one's an X zone, okay? You see the property value, right? The listing price, you see the address. Here is the confirmation of the zone, and we have this hover over that is helping you to understand and associate what zone is what, right? And what the definitions are. And then right underneath that, we've got 3 quotes, right? So we've got the government quote. And again, the government, I'm going to get into this in a moment, but the government has a standard insurance rate, right? So it's $250,000 for the building itself, $100,000 for the property contents, and then their deductible is $1,250 individually for both the building and the property. So it's actually $2,500. And then what we're doing is we're comparing it with the private insurance company. Beyond Floods is part of Allstate now. And so it's an A-rated insurance product. We're comparing the same criteria. And you can see the difference. This is a little bit of a double take on this one, right? It's $45. The private side saying, not much risk. I can get you a good policy for, less than $550. The government's saying, we see some risk. It's closer to $1,000. The reason why the second Beyond Floods thing is here, which is enhanced, is because they can actually do insurance all the way up to 1.5 million for the building, right? They have a lot of flexibility. So a lot of your properties are, much more than, this is 320. So, there is a way for you to get greater coverage and get a greater quote. What we do is we build this in as a baseline of 300,000 just to show, or up to 300,000, just to show that what the stair step would be. In this regard, replacement cost for this is essentially 80%, which is 293,000, and that's priced at $59 a month. So you can just see what a little bit more coverage would be. Again, if the property was worth 750,000, you'd want to get replacement cost of, somewhere in the $600,000 neighborhood. We would recommend that you contact the local insurance agent to do that. That said, we make it very easy if you have questions on the insurance side to contact Erica, who's our strategic partner, able to answer any questions, be able to bind, not just for this, but she has access to other insurance products, both in flood and for any other, home, auto, business that you need. Separately, if you want to reach out to your clients and send this information along, you have 3 different ways to do it with this send along box over here. So you can download the PDF. Which, if you want to take on a showing or have it an open house, let me show you how that looks. This is how that looks. Simple form. Address here. We will drop your name in here, right? Your information there. And then the insurance company. And then we have a disclaimer on all the quotes. And so the disclaimer says that these are directional quotes. They're estimated. But they're not bindable. So you have to work through either our insurance contact or yours to make sure that your client has something that is an official insurance quote and bindable. The other ways that you can send this along is you could get a link by clicking this and drop it into an email or a text, or you could just go ahead and fill out your client's information here for email, customize your message and hit send. And then on the back end, what your client would see is this quote coming up. It's powered by CartoFront. It has to be represented by an actual agency. We're just an insurance technology company. So We Insure has to represent that it's a quote. We have some language here defining kind of what your client's seeing. We have the insurance coverages right in front of them. They can either contact Erica at We Insure, or they could very easily come right back into the quote. So this is that kind of that private link back in. They see the same thing that you would be able to see. Last but not least, our entire system is bilingual. And so if you are working with Spanish speaking clients or Spanish speaking yourself, very easy for you to just click on the Spanish side. everything that you see, all the communication would also be in Spanish. Great. Okay. Awesome. Let's jump into chapter 2 now. And this is really around flood insurance. Let me give you some highlights on that, and then we'll jump into the Q&A. So there is a definition for a flood, and it's important for both the insurance and just the understanding of what is a flood. So a flood is defined as excess water on land that is normally dry, affecting 2 or more areas of land or 2 or more properties. So if you leave your sprinkler on in your backyard and you flood out your backyard, that's not a flood. It's got to affect multiple properties. And that can be caused by a variety of different things. It could be storms, hurricanes. In many parts of the northern half of the country, it's snow and ice damming. And it's also from water backup from inadequate drainage systems, dams, and levees. And, we've had unbelievable growth in building, especially in many parts of your areas. And that, those systems, those kind of antiquated systems may not be able to handle the amount of water runoff based on how close properties are built to each other, concrete, whatever. And so we're seeing a lot of this. In fact, in Michigan, a couple of years ago, a levee broke outside of Midland, Michigan, flooded the entire town. That is definitely flood related, even though it was low risk. That's where the flood insurance would come into effect. Important, what's not a flood? A flood is also not considered to be covered if it's a result of an internal pipe break, a hole in the roof, or broken windows. So really important to note, those are all handled by homeowners. So what is flood insurance, right? Flood insurance protects your property in the event of a flood or flood-related disaster. Seems simple, but it's important to understand that. The flood insurance is not included in homeowners. If there's one thing to take away today, it's this fact. It's that they're separate individual policies for flood insurance, and they need to be bound through a qualified insurance agent. Now, on our platform, we offer both FEMA, right, the National Flood Insurance Program, and a private insurance carrier, which is Beyond Floods, part of the Allstate family. There are multiple carriers in Florida that offer flood, okay? But we just happen to have a strategic relationship with Beyond Floods. We make it easy so you can have a comparison shop, but there are others. And again, better to shop around now, make sure you get the best rates. When you're on our program, we can do a quick quote for single family homes, townhomes, and mobile homes. Land, build to suit, and commercial. If you're working in those areas, you need to reach out to Erica. She'll be happy to help you, and she can do a quote for you manually. But we can't provide a quick quote for those types of uses. You'll have to ask for some help on that. Let's do a little quick comparison between the government's product and a private product. So when you take out insurance with the government, you're actually taking out insurance with the government, right? So they are the insurance agency working through servicers that they work with. And then they'll have sales agents like State Farm, Allstate, Travelers, others that offer, right, their insurance in this, what they call the Write Your Own program, right? It's the government product, but you have different salespeople. When you work with the private market, and the example is Beyond Floods, you're working directly with Allstate in this regard through their subsidiary National General Insurance. So you're insuring with them and with them directly, and it's up to them, right, to bind and service that account, right? So that's how they work. Because of Risk Rating 2.0, now the methodology is identical. They're both using data and technology to risk the property. Now, what's different is how they view the risk and what their actual model is, okay? But the methodology and the pricing system, the theory of it and how they do it is identical now, okay? It's just that their ratings engines are slightly different between the government, right, and how they calculate it, and then an individual private insurer and how they calculate it or view the risk or the information that they have. The coverages and the limits and the deductibles and the options, this is where it's big differences, right? So if there's another important thing to take away, It's that the government has a very kind of one size fits all approach. So again, I'm going to reiterate it, and you'll get all this data and all this information in our ebook, which Edna is going to send along to you. But it's $250,000 for the building and $100,000 for personal property. That's the same if it's in Fort Myers or Fort Bragg. It's the same all around the country for NFIP. Same. The deductibles, same. Very limited options, very limited. It's kind of one size fits all. You can have any color of car as long as it's black, taking the old Ford line. It's the same for the government across the country. Beyond Floods or any other private has a lot more flexibility. And so with Beyond Floods, as an example, they can quote insurance up to 1.5 million for replacement costs for the building. So essentially the building itself and putting it back on its feet would be 1.5 million. And then what they do is for the building contents, it's 50% of whatever you take for the building. So in this example, it'd be 750,000 for personal property. Their deductibles have a range. Their deductibles also are combined for both the building and for the personal property. So if your clients are interested in flexibility, the private market is the way to go, because if they take a high deductible, they're buying down the rate of their coverage, right? And then regarding loss of use, other buildings, the private side has a lot more flexibility there and is willing to write riders to add on to their base coverage. Now, from a waiting period point of view, the government's sticking with their 30-day waiting period. The private insurers have shortened that cycle to as least 5 days on this example. Now, both of them could be waived if a lender needs flood insurance at a closing. So if you get to the closing the next day and you're like, oh boy, I don't have insurance, and you want to bind it within a day or two, if a lender requires it, then you can get the waiting period waived. Now, last but not least, and this kind of goes back to kind of why we're here to help support you, is it used to be that the highest risk properties, it was a no-brainer. It was always you go with FEMA, right? Because they were subsidizing the rates. Well, those days with risk rating 2.0 are no longer. So it's a blurring of the lines between what's highest risk and what's lowest risk and all that. And the government's still maybe going to be the best option for the first $250,000 of coverage for the highest risk. But we would say just take a free quote, because as we just showed in that example, the government's seeing things now in a different way, and they're pricing each property based on its own merits, and whether it's an X zone or whether it's an AE zone, always best to check the rates. All right, so a couple other slides and then we'll get into the Q&A. So building coverage, what's covered? It's the physical structure and anything that's kind of permanently in the property itself. Things like carpeting, refrigerators, bookcases, built-in things like that. Things like detached garages or other buildings, you're going to need a separate building property coverage to do that. It's really important that you understand that. Government doesn't cover that at all, and the private markets would. You just have to get those riders taken care of. Debris removal is covered in the event of a traumatic storm. Contents, so it's the personal belongings, the things you can take with you, things that are portable, valuable items such as artwork, up to a determined amount. Again, work through a qualified insurance agent to make sure these things are covered for your clients. What's not covered, and this is a really important slide. So things like pre-existing mildew, moisture, mold, things like that, not caused by the flood itself, that's not covered, right? So if there's some issue there and they uncover it, they're going to say, no, that's not covered. Things that are destroyed in an event like currency or precious metals, things that are lost, that's not covered. And then other property and belongings outside of the insured building itself, right? So trees or plants or septic tanks or hot tubs or swimming pools, etc. Things that are outside the property itself, those things are not covered unless, again, you talk to a private insurer and get riders on that type of stuff, okay? Landscape and exterior features not covered. Those things are not covered. And then the second to last bullet I kind of glossed over, but let me talk about it. Loss of use or interruption. A lot of people are working from home now because of what's happened with the pandemic. Those things are not covered unless you ask for a rider for those things. So please, please make sure you understand what your client needs or yourself if you're looking for flood insurance. So in the event though, of a flood insurance claim, we just wanted to talk a little bit about, kind of how payments to the policyholder might be calculated. So there's two key terms that we want to make sure that you understand. One is replacement cash value, right? So replacement cash value is the cost to repair or replace an insured property. So in this example, it's the primary residence, right? And it's both the building and the contents would be covered by the replacement cost value. So if it's your personal property and you've got flood insurance, say there's a big storm and you need $100,000 in repairs, that would be replacement cash value to you. Now, secondly, actual cash value is more so for an investment property. And really the way this is viewed is the replacement cost minus its depreciation. So the example here would be, say you or a client has a rental property on the water or a condo on the water, and they've outfitted it with a living room that has a sectional and a TV and internet and blah, blah, blah. Say they have damage. Say they outfitted all of that for, $20,000, 10 years ago, and it's been depreciated and it's worth $5,000 now. They're going to get the $5,000. They're not going to get the full $20,000 because it's actual cash value, right? It's the original value minus the depreciation. Okay. Flood resources. So we have a landing page that we've created with the association. Edna will send you the link on that. It has all the information that we're sharing with you, articles, all sorts of stuff in one place. We have this ebook, right? We have it in English and Spanish. Again, the links will be coming to you. It's 8 digital pages. It's basically a consolidation of what we're sharing with you today. Really easy to pass along to your clients. Great resource. We have flood links embedded in all of this, right? So it's a lot about risk rating 2.0, that Florida State report that I shared with you, and then contacts for some strategic relationships that we have. A quick note about my flood status. Great resource. You pay for it, it's $30, right? Yet, if you want to really get a accurate flood zone determination and a report, if you are contending what the insurance is, the $30 investment can go a long way. myfloodstatus.com. They're terrific. If you have questions beyond this regarding tech or educational support, or you want to run, we sent out an email earlier this week. If you want to run a quote for your own individual property, send it to us at info@cartofront.com. And then if you have insurance related questions, want to talk to Erica about flood related or anything else in home auto business, she'll be happy to help you. She is terrific and she's very responsive. Thank you for sitting through all of that. I'm going to stop the share now and put us on the ability to talk. We've got about 20 minutes. I see there's a lot of action in the chat. So Edna, I'll turn it over to you. And then if you want to unmute, let's have a dialogue. Let's start with the questions in the chat. Edna.
Thank you, Jason. Yes, we actually did have a lot of good questions. I'm going to start with the last one. When you were going through the coverages and what the flood insurance covers, there was a question asking if it covers attached garages.
Great question. If it's attached, it's covered. If it's detached, it's not covered. Yet, again, insurance goes from one to another. So I would qualify that when you're going to bind it. But generally the rule is if it's attached, it's covered.
Okay, perfect. Now, the first question that we actually received was when you were going through the demo, asking if does the current CartoFront model already account for risk rating 2.0 pricing?
Yes. So it does. And what we're doing is we're getting a feed directly from FEMA, and that's what we're representing. So what we do, just to give you kind of the background, we take all the data out of the listing, right? There's like 45 different pieces of data. We then package it down to what the government needs to be able to do risk rating 2.0 and give us a quote back. The same with National General for the private. And then we just present it. So the answer is yes. And I just gave you a little bit of the workflow.
Okay, perfect. Thank you. Now there's a question saying, if someone grandfathers or transfers flood, how long is that good for? We heard only the first year, then it will be repriced.
Okay, great question. So let me be really clear on this. So as long as you're in good standing with the policy, right? As long as you're paying it on time or your client's paying it on time, you are going to keep the rate that you have. Okay. Starting April 1st, if the renewal date is April 2nd, it's going to get renewed on April 2nd with the new rating. But that rate, whatever the price is, and again, the example was your current rate's 500 and it goes to 1,000. You're going to be, your client or you are going to get capped at 18%. So you'll only see a $90 increase in year one, but then they would step it up every year till they got to $1,000. Okay. So that's the way the government's looking at it. If your renewal date, I'm making this up, if you're, again, renewals start on April 1st. If your renewal date is March 10th, a year from today in 2023, then you got the benefit of almost a full year at the current rate before you get reassessed with the risk rating 2.0. So whoever asked the question, I want to just make sure that I answer that correctly for you so you understand. Thank you, Janet. Okay, great.
Okay. Then we have another question saying, what if my customer finds a home not in the MLS associated with this? Can we use a specific address in lieu of the MLS ID number?
To get a quote?
I'm assuming, yes, that's what they're referring to.
I just want to
Janet,
confirm.
Janet, if you were referring to something else, please let us know.
Yes, for a quote. Okay. So short term, send us the address at info@cartofront.com and we'll do it. We'll turn it around and send it to you. Longer term, and this request has come from your association, they want to be able to have just the ability for you to put an address in and get a quote. We're working on that now. It's probably going to take, I'd say, another month or two to get that working. We're working on it. If we can do it sooner, we will, but we'll do it manual for now for you. Happy to do it. And it also might be if you're going to take on a listing, right? I mean, that's the other reason, right? It's not just clients who you've worked with. It's somebody who might say, hey, I'm thinking about selling. You know, that helps you in the marketing, right? Then you can know and be able to advise.
It looks like we have a question about what the email is. You mean the info@cartofront.com?
Yeah, yeah. If you could put that in there, that'd be great.
Yeah.
Thanks, Ed.
Okay, we'll do that as I'm reading the next question. It says, I had a seller who wanted his new buyer being able to take over his flood insurance policy. The seller got a form from his insurance company and we had the buyer sign it.
Right.
The seller made several calls to the insurance company to make sure that this would happen. We closed last week and the buyer has to pay $4,400 instead of $1,200 as the insurance agent didn't put the paperwork incorrectly and we almost couldn't close.
Okay,
so it looks like it's more of a comment.
Yeah, no, but that's a really important, let's talk about that for a second. So there is a form. And Ed, I think Erica shared that form with us on the last call, right? Okay, yes. Let's put that in there. So let's talk about this for a second. So yes, and I think I saw another question. So FEMA allows assumption of existing flood policies by the house. Okay, so that is critical, right? And of course, it's got to be done before or at closing to qualify, right? So it has to be done correctly. There is a form that needs to be filled out, and it needs to be filled out with a qualified insurance agent to help facilitate that. So it's got to be done correctly. Those are the process steps. And I don't know who gave us that story. Joan. Joan, do you want to unmute and maybe give us a little bit more detail? It sounds like a missed opportunity, which I'm
Hi,
sorry
can you
about.
hear me?
Yes, we can. Yeah.
It was a very knowledgeable seller who did a lot of research himself because he's buying a new house being built, so he's very aware of what's going on. And he was the one that apprised me of this. So we got the form. He got the form from his insurance agent. I told the buyer's agent he had never heard of it before, but I told him it's definitely being happened as long as it's being before April 1st. So I said, the buyer signed it. Now it was put into the insurance company, a local insurance company in Cape Coral. The seller called him several times to make sure it was done. He was always on it. He said, I want to make sure this happens for his buyer. It was a $730,000 house. He didn't want to have this. And last week they found out that it wasn't done correctly by the insurance company. They said, oh, we're sorry. And unless you delay the closing, which they couldn't delay the closing, they're flying in everything. And so the buyer had to go buy another insurance policy.
Wow. And they can't undo it at any point. The government
I don't
can't.
know. I said to the other agent, I said, well, I would have gone to another insurance agent because they said they dropped the ball. I'm really sorry. We didn't do it.
Yeah, it's a huge mistake.
2 months.
Yeah. So let me just make sure there's one thing clear for everybody. So it's always assumable, right? It's not that, let me just, Joan, you mentioned something about April 1st. April 1st is when all the renewals are going out.
Right.
Okay. Which is correct, right? So everything's getting reassessed. Yet it's always assumable, but it's always assumable by the time of before or at closing.
Mm-hmm.
So April 1st, even though it's
Yeah.
reassessed, it has no determinant on the assumability or the timing of that.
No, the seller was very frustrated. I was very frustrated. And the buyer was, the seller said, I don't know why you didn't just can't, delay the closing for a couple of weeks. And, but the seller was flying in with his family from Minnesota and
Yeah,
they
sure.
take him from work and a lot of.
I'm sorry. Yeah, I don't know if there's a recourse at this point.
No, just to keep, I had to tell the title company, they had never heard of it either. So a lot of people aren't aware of what's going on. So it's very important. There's a lot of money this buyer is going to be paying now and every year.
Right. No, for sure. For sure.
Thank you very much.
Thank you, John. Ed, next question.
Yes, I think you started to touch on this, but I want to make sure we're addressing this question specifically in the right context. So first starts out saying, are all flood policies assumable? And then to clarify, is it only FEMA policies that are assumable, right, or are private insurance policies assumable?
Right, great question. So FEMA policies are assumable, as we've talked about. I think you have to check with each individual private insurance policies if they're assumable. My sense is they're not assumable, but the government, you'll need to check with somebody, as you investigate. FEMA, yes. Private, I think it's individual by private insurance. My hunch is that they're probably not assumable. They're going to want to requote based on a lot of factors. But the government has made that a part of their program, which is to help. Again, there's surprise, surprise, because it's a government agency. They're trying to be unified across the country and provide equity in this, and so that they've made this concession about the assumability to make sure it works for everybody. And then I think Janet's next question was, how long should it take to transfer a policy that's assumable? It should be a day or two. It's a quick process once the paperwork's done correctly. And again, these are questions that, if you need somebody, talk to Erica about it. But again, back to Joan's story, which is a really unfortunate. It costs $3,200 to somebody on an ongoing basis. That's a big nut. So we want to make sure everyone's educated on this. Critical.
Thank you, Jason. I think we're all caught up on the questions in the chat. I just wrote down our email, but I'll include that in our follow-up, and I'll also include Erica's contact information as well. If there are any other questions, you can write them down in the chat, or feel free to unmute yourself as well.
Hi, this is Greg here,
Hi, Greg.
in Cape Coral, and I had been into using the CartoFront, and I put in, clicked on the water drop, and then it'll bring up the property, and then it just sits there, and I get the spinning, and then it's like it's searching, but it can't seem to come up with any pricing, and I've gone out, come back in, and then it's happened on several occasions, and I just wondered if that was
Yeah,
what might be
Greg.
possible.
Yeah, no, that's, thank you for pointing that out. Actually, if others, type yes or no in the chat if you've experienced the same thing. Okay. Greg, when did this happen most recently?
I want to say it was within the last couple of days. I was in there and we had one, and I mentioned it to somebody here in the office, and they said they had the same issue. And I had sat there, and then I went out of it, went back into it, tried again, and it did the same, just the spinning, and it wouldn't come up with any pricing.
Okay, so there's a couple things that are going on that we're aware of, and I appreciate this. And Greg, if you could put your email in, I'll have my tech person reach out to you and he can have a dialogue with you, because I want to know more. So there are listings that are coming from Bonita and Estero, because you guys are all on the same back end, that we are correcting and hopefully going to be able to show quotes, but they're obviously in another association, but because you guys all have the same back end, they come up in your availability. That's one issue. The other issue is FEMA's technology has been a little up and down, but we thought we had that resolved. I'm more if you can, and Greg, if you could put in one of the addresses that you were searching for, the MLS number, I'll get off this call and get to my tech guy, Henry, and we'll get you on the line today or tomorrow and get into this. But it's, we want to be as reliable, but it still works sometimes, says Stetson. Yeah, this is concerning to me, guys. Greg, if you can unmute, I mean, if you've taken, tell me how many quotes roughly you've attempted and what % have gone through.
Well, basically I was trying it out as a test, just testing the system and looking at it. So unfortunately, I don't remember like the address. I probably just pulled up like a new listing or something out of the MLS. And I wondered if that might have been the case, if it had not of, but yet everything else was in there.
Yeah, and without getting into all the technology stuff, but there's something called Trestle. So when you upload a new listing, it's got to go through a cycle to integrate all the data. And sometimes that cycle's like overnight or within some period. So we if you catch it at the wrong time, it may not have cycled up and presented all the data. If we don't have the information that we need, somewhere along the line, either capturing the info, cleaning it, or sending it off and getting it back, anywhere in that system, it could break and then it won't return a quote to you. At any point, you can just, again, hit us at info@cartofront.com and alert us, or support@cartofront.com would be on the text side. It would go right to Henry. So let me put that in.
I will, if I do have a problem in the future with that, I will make note of the MLS number so that I can send that to you and have that.
I appreciate that. Yes, thank you. So Stetson, if we can have your email too, that'd be great. I can't think of an exact address, but I believe everything I've had an issue with was with Estero. I would say 75% of the quotes I've tried, 10 or more come up with no issues. Great. Thank you, Stetson. So it's either Tamara or Tamara. Hopefully I got it right, one of the two. It's completely free to you. So we have a free model to the MLS and to you as realtors. We get compensated on the back end. If you take a quote and it becomes an insurance policy, we get a technology fee from our strategic partner. We insure. That's how we get compensated. Joan's question: when we are sending listings from the MLS to our clients, do they see the water drop to click on? So Joan, let me just go back here and show you. They would receive this link if you send them an email. So if you put their email address in, they would see, can everybody see the screen? Hopefully everybody can see it. They would get this. And then if they click on this little button here, they go right back into our system. So they'd come right back in. Okay. The other thing I mentioned, so that I mentioned you can do a PDF. The other thing is if you copy a link, I'll do that right now. Let me just copy a link. You could go in and you could compose your own email. I'll send it to myself here. Whoops. Whoops. I'm in the wrong thing here. You could drop it in there and send it off to your client that way and have your own message. Then what your client would see is some message from you, right? And then what they could do then is just click on this link and it does the same thing. It brings you right back into our system. So those are the two ways that the technology works easily. And then there's the paper way of the PDF. Even the PDF, though, you could download it, keep it, and then send it off to your client. So that's another way to do it too. Okay. All right, we're coming up on the top of the hour. Happy to take more questions. We can go overtime on our side. It's up to you. It's how long you want to go or thoughts that you have, but this has been super duper informative. So thank you. Thank you, Janet. Appreciate it. Thank you for everybody for jumping on today.